In this video, I'll walk you through a few trades, around 3 trades that I shared this week, making me around this one 3%, this one 3%, and this one was a whopping 25% of my portfolio. And I'll share with you guys exactly how I did it, right? So if you don't know who I am, I'm JabbyFX. I started in Forex and now I trade with full-time with Velaris Trading. So this year alone, I've pretty much nailed major trends and reversals which help my traders gain clarity and not panic during these times. Okay, so let's get into it. So here we have a trade in SPX. So again, it says here, sometimes it really just is that easy. Okay, so what I did here is, let me just remove this for a while. So what did I see here? Okay, so I was looking at the SPX and it seems like, we've reclaimed the 4-hour moving average. That's good. We had a break of structure over here. Very good. Now the most ideal time to take this trade was here in the 4-hour demand. However, it seems like we got front ran. Absolutely fine with me. Now, there was another break of structure at this point, and I saw a demand zone here. So, immediately I slapped in a limit order here, but I looked for other signs of confluence. So I looked if it was sitting at any kind of moving average. So here it wasn't. The 3-hour, nope. 2, nope. Bingo. So on the 1-hour, we can see that price has been using the 1-hour moving average as dynamic support and even down to the tick, right? Absolutely beautiful. So what I thought to myself, okay, so we're now sitting at that 4-hour demand, okay, that 4-hour demand zone, and there is a 1-hour moving average down below that could act as support. So what I saw here was a sweep even. So we saw a sweep of this liquidity, even making me more confident in my trade. And then the TP would be, guess what? The higher high, because the assumptions here after a higher high is a higher low, and the assumption after a higher low is a higher high. Assumption of a higher low is a higher high. Same thing. Exactly how we traded. So this trade was 3.76%, 3.76 RR. I caught that 11% move, right? So TP'd right there, and it seems like the market just pulled back. So perfect timing the top. Okay. Next here we have our trade on Solana, full TP hit on Sol. So you can see here, right? This is how it looked like. So just a top-down analysis on Sol. We have flipped the moving average, bullish, demand zone. We're trading demand zones, trading demand zones, trading demand zones. Okay, now it was just a quick trade for me. After seeing that we've hit this demand zone, okay, immediately went to the 1-hour. So what we see here on the 1-hour, we have a break of structure here, followed by, so let me just write this down, followed by this demand zone. So slapped in an order, quick take profit here at the higher high, because remember, after a higher low, we get the higher high. That's the assumption, right? That's how the strategy goes. You work in assumptions, right? After a higher high is a higher low, right? Basic market structures, right? Basic market structures. So after marking this out, we look for time frames that basically act as dynamic support in the moving average. Now, here's the thing. Right, here's the thing. Here's what they don't tell you. Here's what they don't tell you. So, when price tends to run away from that moving average in that time frame, it's possible for us to go lower. So that's what I did. Went down to the 15-minute, and I saw that my 1 hour demand zone was sitting exactly at that moving average. So 1 hour demand plus 15-minute moving average, and we have ourselves 3.5 RR. So if you just add those two trades, the SPX and Sol, that's 7% of your account already, 7 RR. So absolutely beautiful. And the last trade that we have here, possibly the best trade that I've ever had this month, was on Aave. Here I risked quite a bit, 3%, to get around 25% of my portfolio. So let me break it down for you guys. So okay, this is the first trade. So what do we see here? We saw on the 4 hour that obviously anybody could tell me that price is bullish. Okay, we broke down from that moving average, but then we V-shape reversal. So we broke structure over here. Very good. Broke structure. Demand zone sitting right at the moving average. And what's the assumption after a higher low? A higher high. Simple. Very, very simple. Very simple. Just basic market structure. Okay? So after that, what now? Market structure break. Break of structure. Demand zone again. So just continuing. Market structure break. Market structure break. Now this is my entry around here at this demand zone, right? And what was I targeting? Well, I was targeting this high over here because I knew that, okay, once liquidity has been taken to the downside, like all of this liquidity has been taken during this leg, now the short orders build up. Now the next side that liquidity will be taken is above, right? So this leg took out this leg's liquidity, okay? Now this leg has built up liquidity that has to be taken out, and it eventually did. So that was my thesis. So what I did here was, okay, I waited for price to get in here, and I was able to bring down, it's supposed to be like this. The trade was supposed to be like this, but I was able to bring it down around here. On this sweep, I managed to bring down my average. So I saw price. So this was my take profit up here. Something like this. Yeah. So up here, okay? Because that's where the liquidity pool is. So when I saw this, that price had, retraced, most traders would be shitting their pants. Honestly. Can't tell me that you're up 6%, 6 RR, and then goes back to your entry and you'll be completely fine, right? Some traders, they panic and they absolutely sell the bottom. But me, not me. Because we're just using the same strategy here. So, higher high. Obviously, after a higher high, we're expecting a higher low. Now, where can price go? So the same strategy that I used here is the same strategy that I'm about to use to analyze this whole price action. There is a demand zone over here. So, for example, you ask yourself, okay, if I wasn't in this trade, where was the next time I'll enter? Right here, right here. So why will you sell when the next person will be entering right here? So here's what I did. This was already a sizable position, and I added even more. So at this point, I added more on this dip. So now I had 3% of my account basically risk on this move. So how percentages risk and RR works is you just multiply it. So if I risk 1%, then my risk to reward is I risk 1% to gain 7.68%. Now me, I risk 3%. So just do the math, right? 7.68 times 3, and suddenly I'm up 25% of my portfolio, right? Based on extremely simple concepts. Come on, guys. It's just higher highs and higher lows, higher high and higher low. What's the assumption, right? We're working on assumptions. This is what I teach my mentees. We operate on assumptions. After a higher high, the assumption is a higher low. So don't be scared if we find a higher low. If the market finds a higher low, don't be scared. And after that higher low, simple, higher high. After higher high, what's the assumption? A higher low. Again, don't be scared. It's a higher low. Price just doesn't go up linearly. After higher low, okay, what's the assumption? Another higher high, and boom, I am TP hit. So I'm telling you guys, it's extremely simple. You can use remember, you can use that same principle here. So we broke structure again. There's a demand zone. This is our higher low. And your TP will be right at the higher high. It's very simple, guys. Very, very simple. Say you miss this again. We have a higher high. Demand zone. Higher low. You TP again at the higher high. Right? So over that span of time, you've taken like 3 absolutely beautiful trades already. So again, it's extremely simple. So that's how I did it. I was able to catch around quite a lot of my portfolio, right? This run up has been quite legendary to me. So that's it, right? That's basically it. That's how to trade it. So hope it gave you guys clarity, right? And if you want to go deeper, I've put together a 3-hour free video guide that takes you from beginner to pro, right? It covers everything. Market structures, I taught it just a bit here. Market structures, right? Market structures, I also talked about it here. Supply and demand, I also talked about it here. Moving averages, I also talked about it here. Come on, guys. Also, psychology, right? Basically, the exact system that I use. I have a 3-hour video for free, right? Link is down below. Okay, link is down below. And well, if you're ready for daily setups and to trade alongside traders like myself, right? Check out our membership. You'll get full access to our trades, community, and support. And if you like how I trade, if you like how I look at the markets, right? We also do mentorships where I do one-on-one mentorship sessions with you. So all of the links are down below. If you want to sign up, it's on you. If you don't, then don't, right? I'll see you on the inside.